All right, hello and welcome to the Stock Operator channel. And in this video, we're going to do something a little special. We're going to do a full fundamental and technical review of a single stock. And that stock is ARRY Technologies, a solar stock. So yeah, if that's what you're into, stick around. All right, so essentially what I did was I prompted, Grok to give me the bull and the bear case of ARRY and, give me a price target, give me the total addressable market, compare it to its competitors, that sort of thing. So what I'm going to do is I'll go ahead and just go through those points. I'll kind of go slowly. You guys can stop the video and read it yourselves. I'll kind of just go over the, bigger points and just move on to the technical side, because that's where we're going to spend the majority of the time during this video, just analyzing the technicals and letting you guys know what I see. So yeah, without further ado, let's go get into it and see what's going on with the fundamentals of ARRY Technologies. All right, so ARRY Technologies is basically a tracking company. It helps the solar panels track the sun, and that sort of thing. So I guess they suggest that the price could rise to about $12, $15 in a year or so. And with any of these kind of AI deep research sort of things, take it with a grain of salt, and then I use my technicals to see if it makes sense or not. I ask it to give the bull case and the bear case price targets and see if the technicals support that. So here it's looking like 12 to 15 is the bull case or the high target, and bear case is 4 to 6. Seeing as how the stock price is sitting at about $7.50, that's pretty good if the bear case is only $6 or $4, because if we're selling some calls or doing that sort of thing, we can generate enough income to offset that. Because the main reason why I like this stock and I'm getting into this stock is because the implied volatility is very high, and you could sell some calls on this thing even while it's going sideways. But yeah, without waiting any longer, so I'll just hit some key points. So the bull case is essentially it's showing pretty decent revenue growth. Net income. It's got a big order book, $2 billion, because I guess an acquisition or something like that. And it's got some new products coming out. It's not the biggest player, but it's looking like solar trackers are going to grow at about 15 to 20% annualized. So this is a pretty decent industry to be in, even though the stock prices are going down. Yeah, the bear case is, of course, if you guys have been following this big beautiful bill. These guys are taking away a lot of subsidies for solar stocks and just solar companies in general, and a lot of these companies were able to survive because of all the subsidies. So that's bearish, but it's so bad it's good. I don't know if that could get any worse, but essentially, this company has a lot of competition. Nextracker, which is the leader, even the stock looks good, but I like to personally buy stocks with higher implied volatility rather than potentially the leader with lower implied volatility, because I could sell some calls. And if you guys have followed the channel, we're messing around with $100,000 account, so I want the stock price to be a certain price so that I can grab 100 shares and sell those calls. So this one fits the bill versus Nextracker, which is a more pricey stock. So we're weighing a couple different things when we're making these decisions in the portfolio and for the channel. So yeah, Nextracker is the biggest competitor. It's a little bit more expensive. I believe it's 3 times sales versus what is this one? ARRY Technologies got 1 time sales, so ARRY is a little cheaper. We like that. Yeah, and I spoke about the industry TAM and the growth of the solar tracker market. It's a good market to be in. 15-20%, and 25% for solar in general. It's a little bit better than oil and gas. I think we're going to be in an energy bull market, so this is something I'm interested in. So yeah, I mean, it's leading tracker of headquartered in Mexico or New Mexico. Operates 70% revenue from the United States. So we if we're going to build out our energy infrastructure, this is going to be a company that will help with that. I know there's a lot of things going on with nuclear, but I think solar farms that track the sun, it's going to be a thing, and people are going to spend money on that because solar's pretty clean. So yeah, moving onwards, let's go check it out. Let's look at the intrinsic value. So bull case assuming achieves $1.1 billion of revenue, midpoint, price of sales at $2, so market cap would be about 2.2 billion with 152 million shares, yielding stock price about 14.50. Yeah, so that looks pretty good. So it suggests that it's a little bit undervalued right now, considering it's $7.50. So we already talked about the competitor analysis and the industry TAM and that sort of thing. Let's move onwards. So price to sales is 1 versus Nextracker's 3. Stock performance, and we'll get into the TA a little bit later, but off of the April Liberation Day, this ARRY has actually gone up more than Nextracker, so it could potentially be the leader, but it's a little bit harder to see that because ARRY is more of a downtrending base versus Nextracker's sideways sort of a base, and we'll talk about that later. But yeah, I mean, essentially the industry is going to be growing. It's got a decent competitor. Its market share is 10 to 15% versus Nextracker's 20 to 25%. But it's a growing industry, and it's not going to get affected that much compared to some other solar stocks by the big beautiful bill. So yeah, I mean, without that, significant risk from competitors and policy changes, and so bull case 12-15 and bear case 4 to 6. So yeah, it's looking pretty decent here. So let's get into the TA and see what that has to say. So what I'm going to do is I'll do a monthly to weekly to daily. So it's going to be multiple time frames, technical analysis. So we'll get you guys going with that. So check it out. All right. So when I'm doing the TA on any stock for a full review and analysis, what I first start with is the monthly. And I like to go back 10 years, but the stock hasn't been around for 10 years. It's only been around for a couple years. And what I do here is I put anchored VWAPs on every year, okay? And it provides an interesting picture here. I mean, where, we kind of IPO'd, rallied a little bit, then declined, extensively. I think the stock went down 85%, something crazy. And as you could see, the anchor VWAP tracks where everybody's, essentially, how much they paid for it. So what's the fair value of it over time during that year, and whether people are up or down on the stock. And it looks to be that this stock has just been in the seller's control this entire time. And the moment it was able to potentially break out and get out of seller's control, they took it back down. But taking a longer term view on this thing, it's kind of looking to me like it's forming a long-term range. And basically getting in here, you're basically getting in at the low of that range. Whereas the high of the range could be towards, let's say like 23 to 25-ish area. So, you're getting in here at $7 with confirmation that it's actually stopped going down, with this move right here, because these two monthly candles are the strongest monthly candles we've seen in some time. So it's already kind of confirmed that it's going back up, and the downtrend has stopped. So with that, it's not a bad spot to initiate a position. I also like to look at the fundamentals. As you can see here, the sales. I put a little moving average on the sales, and it looks to be, like it's getting back up there. It's improving just a little bit in terms of sales, in terms of revenue change. The earnings haven't caught up yet, but yeah, that typically happens. It's gonna be a little while. and the gross margins is took a little hit, but it's still sitting there, 25%. Yeah, profit margins are down big, and that's probably why the stock is going down. But anytime it's revenue's been hit for this long and it's starting to tick back up, that's a good sign. So we could be in for a reversal here. Yeah, so that's basically the monthly analysis. Where I think even with the monthly, we got $9 here at the first anchored VWAP, and then we got about $13 to $15 where the majority of the people have traded this thing, or their cost basis is. So we got room going up to 13 to 14 according to the monthly analysis. So, and that matches with the deep research price target via the fundamentals. So hey, that's a win for those guys. So moving onwards, I like to go to the weekly, and I like to show you guys the stage analysis of the weekly, and essentially I just color code each candle depending on where it is. So right now we are in a stage 2A, so it's just about to start a uptrend according to that model. Now, once I get into the daily, I'll show you guys that it's basically already started an uptrend and it's broken out of this downtrending base. But yeah, it looks pretty good. Yeah, what we look for is we try to analyze the waves. Okay, essentially, when a stock goes down, it's going down in a wave. When a stock goes up, it's going up in a wave. And we kind of analyze wave to wave. So up to up, down to down, and also down to up. Okay, so if we kind of look here, it's obviously been in a downtrend, and if we kind of check out each one of these waves, okay, it's weaker, 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 weaker on the upside, and it's just very weak right here, okay? But now, if we look at this wave right here, this is the strongest wave during the entire downtrend. So that's what we call a change of behavior, okay? So the stock has changed. It's no longer going down, okay? So we like that. Even if it doesn't go up, we could sell calls on this thing because the implied volatility is so high, even if it continues to go sideways. But and you're going to get paid a lot. You're selling the $9 calls 1 month out, and you're getting 5% per month. That's not bad if this thing goes sideways. So yeah, we like that. It's trying to break out here, and it's just having what we call a little backup action where it makes a change of behavior. And if we notice here, if we compare this down wave here, okay, versus this down wave, or even this down wave, this is much weaker down wave. So this is an ideal place to enter a position, because we have a change of character, and then we have a confirmation that the sellers are not trying to take this thing down anymore. Because if you look at this wick right here, that's a nice amount of demand that's come into the stock. Now, this up wave after that down wave is a little bit weaker than the previous, but we just needed to go sideways. These guys had the opportunity to take it down after this up wave, and it seems as though they're failing at the moment. So we like that. That's good. So yeah, that's pretty much what I see on the weekly. I could explain the volume. So the volume that I have down here is two things. I have dollar volume. So as you could see, the dollar volume, because of the share price going down, even though they're trading more shares, the amount of money flowing into this thing has gone down. Okay. But I also have this normalized volume. So it kind of just takes share price into account, and you can kind of just see with these gray kind of shadows if on a normalized basis, if there's a lot of volume coming into this thing, even though on an absolute basis, the dollar volume is kind of showing less interest. But that's good. We want to be interested in stocks that are showing less interest to the majority of the money, right? We want to be in the stock when the majority of the money starts coming into the stock, like up here. And we want to be selling then, and we want to be buying when nobody's interested. Okay, so let's move on to the daily and then check that out. Okay, so what we have going on here is this is the daily chart of ARRY, and something I would like to show you guys is this stock is basically, you can analyze it a few different ways, and what I've done here is I've taken a longer channel Wyckoff range channel downtrending to kind of combine two smaller ranges. So you can obviously see here, there's one range here with a breakout here. If we draw this, say this thing here, there's an obvious breakout here and into another range, which kind of looks right here. Yeah, like this kind of thing right here, this range right here. But you can also combine the two, right? Which was what I did here, to create kind of a composite or compound range. And it seems as if ARRY has broken out, and it's actually in an uptrend, even though it's downtrending, which is kind of confusing, but that's the way I'm looking at it. It's in a downtrending range, and it's broken out to the upside, and it should be in an uptrend here. But now, because it's a downtrending range, the breakout could actually lead to sideways action rather than just straight going up. So it's a little bit weaker. But given that the implied volatility is high, we could sell call options on this thing. So taking a look here, I went ahead and got into this thing. I think I got in like, what is this, like $7.70 or something like that. You guys could check out the portfolio in the description here. And I went ahead and sold the $9 calls for about 35 cents. So, I mean, worst case scenario, we're actually trying to buy a little bit more of this thing if this thing pulls back, because we think it could pull back to about, $6.80 or $7 here. So we haven't stepped in with the whole position here, but yeah, I mean, we're interested in the stock, and we're just going to sell the $9 calls because we think it's going to at least go sideways for July, and selling those $9 calls should be easy money, for us to collect. Yeah, I mean, without that, I mean, the quarterly moving average, which is this moving average, and this is the yearly moving average. And whenever these things cross, the trend could change potentially. Now, anytime these two moving averages get really close to each other, there's kind of like a rubber band effect. So if it's above, it could pull back. So that's why we didn't buy all of it. We're just going to buy a little bit at a time. But everything is looking good for this stock. I mean, if we look at this downtrending range, this was kind of the main buying opportunity, but we were looking at other stuff at the time. I mean, the stock is already up like 80% since that. So it's a leading stock. It really is. If you had purchased it at the Liberation Day kind of low. So we like that. We want to be in the leading stocks. But yeah, this was the main. As you can see, like up here, this is a distance from the moving average, and you could see the divergence when this thing made a new low, but it did not make a new low when you compare it to the distance from these moving averages. And that's something I like to look for on the upside and also the downside to enter positions. But backup action is not a bad spot to get into these stocks. But yeah, I mean, so with that, I mean, price targets on this thing, I agree with the kind of AI fundamental analysis here, where we could get to about $14. Now, why is that? I like to look for where the smartest guys in the room are. If you guys have been following the channel, like, I'm really big on that. So there's two spots. If this thing really gets going, $20 would be the end-all price target, right? Where we would have to watch it carefully, but $20 would be great. But then the $14 price target. Now, why $14? Because this is, if you take a look at all the other solar stocks, okay, like ENPH, FSLR right here, SEDG, they all took a hit at the same time pretty much. So that area is very interesting because that's the main selling climax of all these stocks. Okay, and same thing with Next Tracker right here. That's where it is right there. So that would be the initial spot where people started to get into these things, or smart money started to get in, because a lot of people were puking these things out. But I think, once we get there, a lot of people could sell out of these things. So that's the main target, okay, is the selling climax low, because that's where people, initially found value in this stock. Now, before that, certainly where it's at right here, like I could put another one right here, and then we go like that, and we go like this. So this area, and that's why I sold the $9 call. So I'm just basically making a bet that for the next month, maybe even 2 months, this thing's going sideways. It's not going to get to 9. So I could collect some easy premium while this thing is going sideways. You know, could go back here, go back up. You know, make a tiny little range, because essentially I'm thinking that this is going to be another kind of Wyckoff range on a smaller scale, and before it moves up. So it's going to take about a month or two before it starts going to 14. But once it gets above $9, it should be clear skies. You know, this thing should move to 14 pretty quickly. And when that happens, we want to kind of be out of the calls. But we'll see. You know, you could still make it work by selling the calls. But yeah, I think that hit about everything. From monthly to the weekly and now the daily. And I think this stock is setting up for a nice move. So we could get a little double in this thing or more. So, hey, if you guys enjoyed the content, feel free to like and subscribe, and comment if you guys agree or disagree, or want me to check out your own stock. So thank you guys again, and I'll see you on the next one. Cheers.